21,000, the Dow just hit. Your thoughts on that and what it means for public equities before we start talking about private equity?
Well, clearly the public equity market enjoys what the president is doing or talking about, so the market is very, very high. I don't think anybody anticipated this on the day of the election, but obviously a lot of stocks, particularly in the financial service areas, are up. I think private equity probably has benefited from that because when public equity goes up by a certain amount, valuations of private equity go up as well. Now, that's very good if you're selling things. If you're buying things, it also makes it a little bit more expensive. But generally, I think this conference indicates that private equity is fairly bullish, too, about the economy.
And why is private equity so bullish? What has the president said or said he's going to do that makes people so enthusiastic?
Well, obviously, people from all over the world are here, and they're not affected by what happens in the United States completely, but the United States is dominant in what the private equity world does. So I think the reason that people are excited about it is they feel that there will be less regulation of private equity in some ways. The animus that some people have to private equity might not be there. I think some people don't like private equity. They think private equity people don't do great things, and I think, therefore, they feel there's some feeling that maybe we aren't as good as we think we are. I think their feeling is now that the administration will be focusing on other things and not beating up on private equity, not that the previous administration did, but I think generally there's an atmosphere that private equity is welcome into the financial community, and I think the regulations and deregulations coming out of Washington and maybe some lower taxes will be favorable.
So overall bullish view on the president from private equity?
At this conference, very bullish on private equity, and people here, I've been coming to this for 20 years, and I haven't seen anything quite as bullish.
And one of the topics that's come up a lot, and the president reiterated it last night in his address to Congress, is infrastructure.
Yes.
Something we haven't heard a lot about. Suddenly it's everywhere. How realistic is this trillion-dollar figure that he's talking about from your estimation?
Well, I think it's unlikely we're going to have it quickly go into effect. It takes a long time to build infrastructure, and it takes a long time to get Congress to authorize it, and then you have to figure out where's the money going to come from. So far, no sources have been identified. I think it's possible that money that comes back from U.S. companies overseas, that money could be repatriated and used for infrastructure. That might only be $200 billion. Not that $200 billion isn't a lot, but get $1 trillion, that's a lot. Now, $1 trillion may take many years to get it done. I do think there's going to be some private partnerships. Our firm is one that is, like other private equity firms, involved in investing in infrastructure. So I think there's money there. The interesting thing is really, in old days, Congress infrastructure was called pork barrel. And people said we were building bridges, we're building dams, we don't really need them. Now we recognize we need these things, and it's not called pork barrel, it's called infrastructure. And infrastructure is a word that everybody likes.
And the enthusiasm here in Berlin is not just for the current administration, but overall for the industry. Fundraising is hitting new record levels. Deal making seems robust. How sustainable is that? Are we at the peak of a cycle?
Well, you never know you're at the peak of the cycle till the cycle has peaked and you're in the bubble having burst. I don't know that we're at a peak, but I do think that people feel that there's a lot of good returns that have come out of private equity. Private equity returns have drifted down a bit, but we are still about 800 basis points over public equity returns on average. And as long as those two averages stay, 800 basis point differential, I think people are going to put money in private equity. And private equity people add a lot more value than they used to. We have a lot of operating managers that now really add value to companies. So I do think that the industry's bullish nature is probably justified.
And given the perennial, it seems now, overhang of capital, all of this dry powder, how quickly can managers like yourself put it to work? Is there a lot of pressure you're feeling?
Well, I want to put it in context. If you take the stock markets around the world, it's probably $85 trillion. So private equity is still just maybe $3 or $4 trillion total with the money in the ground and money that has yet to be invested. So it's still a relatively small percentage of the dollars that are available in terms of the overall markets. I think the money can be invested because you have money, 5 years or 6 years to invest this amount of money. So I can be invested, yes.
And is money still very easy to raise? You're out around the world all the time.
Well, if it was that easy, I wouldn't be around the world all the time. So it takes some time. You can't just call it in. I like to say that I wish I could just call people up in Abu Dhabi or Singapore and say, send me the money. But I have to show up, as do the other people in our firm and other firms as well. But still, people want to put money in private equity because they think the returns are likely to be higher than any other asset class, and they think the risk reward is just better than anything else. So money is coming in, and people are saying, we want to be in the first closes of your funds because we don't want to get shut out. It used to be people wait till the end, and they might come in, they might not. Now people want to come in and make sure they get their fair allocation. So I think it's actually a pretty good time to raise money.